Will XRP still grow even if the Clarity Act never passes? That's the question thousands of investors are asking right now. Every time there's another delay in Washington, social media fills up with predictions that XRP is finished or that institutional adoption will stop completely. But is that really what's happening behind the scenes? Or are investors focusing on the wrong story? The truth is, the Clarity Act is important. Clear regulations would give banks, investment firms, and financial institutions more confidence when launching crypto-related products. It would remove much of the legal uncertainty that has slowed the industry over the past few years. That's why so many people are watching every update coming out of Washington. But here's the bigger question. Does a delayed bill automatically mean blockchain innovation comes to a halt? When you look beyond the headlines, the answer isn't that simple. Even while lawmakers continue debating crypto legislation, the industry hasn't stopped building. Companies are still launching new products, financial institutions are still exploring blockchain technology, and major organizations continue investing billions into digital asset infrastructure. That tells us something important. Innovation doesn't simply freeze every time there's political uncertainty. In fact, one of the biggest mistakes investors make is assuming that every development depends on a single piece of legislation. Markets rarely work that way. Technology continues to evolve, businesses continue preparing for the future, and companies keep building because they know digital finance isn't just a short-term trend. We're already seeing examples of that today. Large financial institutions are moving toward modernizing financial markets. Tokenized assets are becoming a serious discussion. Stablecoins are expanding into enterprise use cases, and traditional finance is increasingly experimenting with blockchain-based solutions. None of these conversations started yesterday, and they certainly aren't disappearing, because lawmakers need more time to reach an agreement. That's why it's important to separate political headlines from real industry progress. The Clarity Act could absolutely speed up adoption by creating a stronger regulatory framework. There's no question about that. But many developments happening today suggest that companies aren't sitting still while they wait. They're preparing for what comes next. This is exactly why so many analysts continue focusing on infrastructure instead of daily price action. Markets move up and down, news changes every day, political debates come and go, but infrastructure is different. Once financial systems begin integrating blockchain technology, those investments are designed with long-term goals in mind, not just next week's headlines. And that's where XRP continues to stay part of the conversation. Ripple has spent years building relationships with financial institutions, expanding payment solutions, and developing enterprise-focused products. Whether legislation arrives next month or later, those partnerships and technological developments don't simply disappear overnight. So instead of asking whether one bill alone determines XRP's future, a better question might be this. Is the financial industry still moving toward blockchain adoption? Because if the answer is yes, then investors should probably pay just as much attention to what's happening inside the industry as they do to what's happening inside Congress. And once you start looking at the bigger picture, you'll notice something interesting. Some of the biggest developments in digital finance are continuing to move forward, regardless of the political noise. In the next section, we'll look at those real-world developments, and why many believe they're far more important than the daily headlines surrounding the Clarity Act. So, what are these developments that continue moving forward even while lawmakers debate crypto legislation? One of the biggest examples is the growing shift toward tokenized assets. Across the financial industry, more companies are exploring ways to bring traditional assets onto blockchain networks. Instead of relying entirely on older financial systems, they're testing faster, more efficient ways to move value, settle transactions, and manage ownership. At the same time, stablecoins are becoming a much bigger part of that conversation. Rather than being viewed only as crypto trading tools, stablecoins are increasingly being used for real business applications, including cross-border payments, treasury management, and enterprise settlements. This is exactly why companies like Ripple continue investing heavily in infrastructure designed for institutional use, instead of focusing only on retail markets. Another important trend is the push toward longer trading hours. Several major financial exchanges are already exploring extended or nearly around-the-clock trading. While these initiatives aren't directly tied to the Clarity Act, they show that traditional finance is gradually moving toward a more digital and always-on financial system. That matters because blockchain technology was built to operate 24 hours a day, 7 days a week. As financial markets continue modernizing, many believe blockchain-based systems will naturally become a larger part of that evolution. We're also seeing institutions expand their digital asset strategies through partnerships, instead of trying to build everything from scratch, rather than connecting with thousands of financial firms one by one. Companies are working with existing networks that already serve large numbers of institutions. That approach allows new technology to scale much faster once it's ready for wider adoption. This is one reason Ripple's enterprise strategy continues attracting attention. Instead of chasing short-term headlines, the company has consistently focused on building relationships, expanding payment infrastructure, and creating products designed for businesses and financial institutions. Of course, none of this guarantees what XRP's price will do tomorrow, next month, or even next year. Crypto markets remain volatile, and regulations still play an important role in how quickly adoption moves forward. But when you step back and look at the bigger picture, it's clear that blockchain development hasn't stopped. Companies continue investing, institutions continue preparing, new products continue launching, and discussions around tokenization, digital payments, and enterprise blockchain solutions continue gaining momentum around the world. That's why many long-term investors are paying attention to more than just political headlines. They're watching where the infrastructure is being built, where institutional interest is growing, and where real-world adoption continues to expand. The Clarity Act could certainly accelerate that progress if it becomes law. But the broader transformation of digital finance appears to be moving forward regardless. The real question isn't whether innovation will happen, it's how quickly it will scale once regulation finally catches up with the technology. So will XRP still grow without the Clarity Act? Based on everything we've discussed today, the answer isn't simply yes or no. The Clarity Act could certainly accelerate adoption by giving institutions greater confidence and a clearer regulatory framework. But at the same time, the broader blockchain industry doesn't appear to be standing still while lawmakers continue debating. We're already seeing companies build infrastructure, expand stablecoin ecosystems, explore tokenized assets, and prepare financial systems for a more digital future. Those developments suggest that innovation is continuing. Even if the regulatory process takes longer than many investors would like, for XRP holders, that means the smartest approach may be to focus on long-term adoption rather than getting caught up in every political headline. Regulations matter, but so do partnerships, enterprise solutions, institutional interest, and the technology that's being built behind the scenes. As always, remember that no one can predict exactly how the market will move next. Crypto remains volatile, and every investment carries risk. That's why it's important to stay informed, think long-term, and make decisions based on research rather than emotion. If you enjoyed this breakdown, don't forget to like the video, subscribe to the channel, and turn on notifications so you never miss our latest XRP updates. Thanks for watching, and I'll see you in the next one.